The specter of another correction is spooking many traders this month, especially as the Fed winds down its massive bond buying stimulus program. Could investors see a 10% drop in the broader market this month, or will the upcoming midterms give Wall Street a boost? We're covering your assets tonight with Mike Woods, Executive Vice President of the Pension Mark Retirement Group, Nancy Coutu, Principal of the Money Managers Financial Group, and Greg Melia, President of the Melia Advisory Group. Welcome all. Great to have you here. So, Greg, a little ray of sunshine amid all the expectations of doom and gloom here. We could get a boost from midterm elections. How does that work?
We could get a boom. History says that we should get a boom. I'm never a person that likes to vote against history. I use history a lot. We have a lot of uncertainty facing the market with everything we look at between Ebola and ISIS and everything that's there. But the midterm elections what everybody tends to think is they bring a lot of certainty to it, and maybe we'll counteract some of that uncertainty.
So what we're seeing in stocks, and this is according to Sam Stovall over at S&P Capital, they tend to rise October 31st to the following April 30th. They're up like almost 20%, 17.5% on average, and this is one of those trends that you don't want to avoid because the trend is your friend. Mike, to you, what do you make of this? Is this just one of those anomalies, or do you think this is something you'd like to play?
Well, Gerri, I hope it happens, obviously, for all of our clients, but we manage a lot of employees in corporate retirement plans, so I don't want our clients to really think about it, because we're trying to help them put money away for retirement for a long time, 10 years, 20 years, 30 years. So while everybody wants the market to go up, I don't want my clients really focusing on that if there is a bump.
Well, Nancy, more short-term, October, worst performers have been utilities and energy. What do you see in your crystal ball for the next 30 days here?
Well, as a long-term planner also, we don't focus on the short term, but certainly it's an opportunity right now. You want to be contrarian when you're investing, but think of the long term. Don't think for the next 30 days or 90 days. Think long term, measure what your investment recommendation or selection is based on your risk tolerance and your time horizon.
Greg, you know, we talk a lot, or have over the past week or so, about what's going on in the bond market. And one of the topics, obviously, has been Bill Gross and his exit from the company. He founded PIMCO and moving over to Janus. What is the latest on this? I know a lot of people have backed out of PIMCO funds. Do you expect more to do the same?
Probably so. You know, I've experienced in life, I've always believed that things come in cycles, and being somebody that follows sports, you'll see a team or a sports or a person that will do very, very well, but there always comes a time where it seems to go the other direction, and usually you vote against that and you end up losing. So, I mean, voting for the person, I think you've got to watch out. Hopefully, I think no matter what happens, no matter where he goes, his reputation, he will be successful with Janus or anybody else.
So, Mike, what are you telling your clients? You know, there was a story, I believe, in Barron's this weekend about Gross meeting up with the head of DoubleLine Capital CEO Jeffrey Gundlach, and he said, I am Kobe, you're LeBron James. I mean, this guy is hilarious. He says, I have 5 rings, you have 2, probably going to 5. What do you make of all this? And most importantly, what are you telling your clients?
Well, I think it's a good headline. It sounds good. Obviously, you have 2 of the most famous bond managers in the world meeting. It makes for a good headline, but I personally don't think that it would have worked. To be as successful as both Bill and Jeffrey are, you have to be very confident in your picks. And what if one of them wanted to buy more and the other one wanted to sell? Who was ultimately going to make that decision? So while it was a good headline, I don't think that it was good, you know, in the long term it would have worked. And we are worried. You know, Bill leaving, the funds had some issues over the last 18 months. And so we are recommending, you know, to our clients that we really need to look at that. And we need to make sure that, you know, staying with PIMCO is the right thing to do for the long term.
So you haven't pulled the plug yet. Nancy, how about you? What do you make of PIMCO's future? And is the era of the star bond manager over?
Well, for one, PIMCO Total Return is an unbelievable story. PIMCO as a company is an unbelievable story when it comes to income planning, and certainly Bill Gross is, you know, the lead, without a doubt, in the industry. PIMCO's loss of Bill is a huge loss, and for professional portfolio managers like myself, I do take it very seriously. We do watch the management of a fund, not the fund name. So when he leaves his funds, along with it is his performance. They have to start over again. But the team that follows him is very experienced.
So are you staying?
And,
Are you staying with PIMCO?
For the near term, absolutely. We're watching it very
Interesting.
closely, but we're following it very closely.
Well, good stuff, guys. Thanks for coming on tonight. Mike, Nancy, and Greg, thank you.
Thank you.
Thank you,
Thank
Gerri.
you.
Thanks for having me.